Insurance Group, and I'd like to thank everybody for being on the call today. And first and foremost, I'd like to thank all you existing URL producers who are on the call today. We truly appreciate your business here. We know you have a lot of options of where you place your business, and we are very happy that you chose to work with URL. For those of you brand new agents that are on the call today, welcome. We hope we can shed some light on a very hot product for you, and we definitely look forward to working with you. Okay, briefly, we're going to talk a little bit about a single premium life today. And for those of you who know me, I've been in the annuity business for over 30 years, and I love the annuity business. It's a business right now that is booming. 2013 was a great year for the industry, and it followed up a very, very good 2012 as well. Finally, people are starting to see the benefit of no downside risk and just the potential gain that indexing offers, and indexed annuities are really starting to carry their weight, and business has been awesome. But today we're going to talk about another product other than the annuity. Like I said, I love annuities, but the truth is some people have needs that can be better served with single premium life. So that's what we're going to focus on today. Just going to take about 30 minutes of your time, give you an overview, and hopefully you'll see the benefits of single premium life, and we can work together one-on-one to get you fine-tuned on the product and help you find the best product for your client. Single premium life has changed dramatically for the better over the last few years. As folks are learning about the new single premium life, sales have started to soar. Each and every month, our sales here at URL grow bigger and bigger, and the biggest change is the living benefits that single premium life now offers. So you might be wondering, why is it so popular? Well, let's take a look at why single premium life is popular right now. First of all, as many of you know, the rates on CDs, money markets, and passbook savings are ridiculously low. It's estimated that there is between $6 and $10 million in banks in those savings accounts or CDs. A lot of them just waiting to be transferred to the next generation. What better way than life insurance? Life insurance has always been and still is the most efficient way to transfer money from one generation to the next. And with today's low rates, it makes even more sense than ever to move money out of the bank and into single premium life. Secondly, the high cost of long-term care is causing people to look at single premium life. New plans are very, very expensive, although they serve a job well, but they are expensive. And in addition, there's thousands of old long-term care plans out there that are getting a rate adjustments due to inaccurate premium assumptions from years ago. In addition to the high cost of long-term care, there's very restrictive underwriting of these plans, and it's leading more and more people to look for alternatives such as single premium life. Last, but surely not least, long-term care has the old use it or lose it property that single premium life with living benefits does not have. If the living benefits aren't used, the people still have many valuable features that make single premium life attractive. Another reason single premium life is so popular is the old cash value that we find in life plans that are no longer needed. A lot of people bought old Pru or Met or some kind of old policies 20 or 30 years ago that they've been paying on religiously, and it's not uncommon for us to see a old life plan with a $50,000 death benefit and $30,000 to $35,000 of cash value. Well, those people hit the point where they don't feel that they need that $50,000 and they get tired of paying the premium, so they want to dump the policy. But a better alternative, rather than dumping it, would be to take those cash values, do a tax-free transfer into a single premium life, eliminate the premium process, and have not only the death benefit, but living benefits for long-term care or home health care. So this makes a nice alternative to those old plans that nobody wants to pay on anymore. Finally, one last thing I'll mention as to why single premium life is so popular has to do with taxes. Nobody wants to pay taxes, and nobody wants to pay more than they have to. So we can use a single premium life plan to transfer taxable money into non-taxable life insurance. Now, we're not talking about avoiding taxes. We're talking about minimizing taxes. And we'll talk a little more about this later in the presentation, and we'll even show you an example of how that works. Okay, we have a variety of single premium life carriers and products, each with their own unique provisions and underwriting requirements. We represent companies like Equitrust, Baltimore Life, Lincoln, Americo, Genworth, National Western, all the top companies in the single premium life market. Almost all these companies have the same basic selling points on single premium life. They offer a single premium where the immediate death benefit is greater than the premium paid, and it's generally free from income tax payments. They also offer tax-deferred growth. Plans are either whole life with set rates declared annually by the carrier, or universal life, with the plans being the most popular. The most popular universal life is the indexed UL, which allows for greater potential of cash value growth that is tied to the performance of the S&P 500. So as the cash values grow, so do the death benefits. And again, the death benefits are usually tax-free if they go to a named beneficiary. But here's a big selling point. One of the biggest driving forces in the sale of the single premium life is the feature that allows the client to have access to the current death benefit due to chronic illness, which is also called home health care, terminal illness, or nursing home confinement. Now, let's take a quick look at the two products offered by one of our top carriers, Equitrust Life. Equitrust offers both a whole life plan called Wealth Sure and an indexed UL plan called Wealth Max Bonus. First, the Wealth Sure plan. The Wealth Sure provides a guaranteed death benefit greater than the premium paid. It has guaranteed values based on a 3% interest rate. It has a current interest rate of 4.9%. And it does offer that the living benefits for home health care, long-term care, or terminal illness. In addition, these policies allow you to pull up to 5% a year out after the first year for emergency uses, almost like a free withdrawal provision of an annuity. So it's always nice to know that the client has liquidity in this policy. Now, let's look at the guaranteed benefits for a 62-year-old female placing $50,000 into the Wealth Sure plan. As you can see by the screen, it provides a guaranteed death benefit of $95,500. Again, that's based on a 3% interest rate. That's almost double the premium. And the face amount is guaranteed for the life of the plan. As you can see, the non-guaranteed death benefit is $100,622, which is more than double the premium. Now, don't you think all your prospects would feel that this is a great way to leave more benefits to their beneficiaries? Think about if they had that $50,000 in their bank CD and they were to pass on, the beneficiaries would get the $50,000 plus a little bit of interest. In this case, they would get over double what they put in, or over $100,000. In addition, the death benefit can be used for living benefits as well. You can see here, based on the guaranteed death benefit, the plan provides for $95,250 of nursing care benefit or chronic illness benefit, and it's slightly less for the terminal illness needs. In other words, all the death benefit is available except for $250. If you exercise these riders, there is a one-time policy fee of $250. That's why all the benefit except for $250 is available. Now please note on this example, in order to keep the insurance department and the insurance companies happy, we're showing the benefit for nursing care and chronic illness based on the guaranteed death benefit. But in reality, if this policy was in force, the client's total available money for nursing care or chronic illness or terminal illness is based off the current death benefit. That's the $100,622. So in this example, we would take the $100,622, subtract out $250, and that would be the benefits that are available for living benefits. Okay, let's look at the tabular details of this case, which show both the guaranteed and non-guaranteed values. And all we showed here for space purposes is the first 20 years. You can see the guaranteed minimum death benefits, $95,500, and it'll run to maturity, which is age 121. So in no instance will this thing lapse unless the policy is surrendered or withdrawals are made. Now on the non-guaranteed side, values begin to grow as the years go by, and as the death benefit grows, the living benefits grow as well, because living benefits are based on the non-guaranteed, or what we call the current death benefit. So in this example, you can see 15 years from now, at age 77, if this projection holds, the client's available funds for home health care or nursing home care would be $111,682. That's the death benefit, non-guaranteed in year 15, minus $250 one-time administrative fee, or that leaves a total of $111,432. Not too bad. Now, a more popular single premium product is the Wealth Max Bonus Plan from Equitrust. It is an indexed universal life that offers 3 indexing options and a fixed account. The potential for cash value and death benefit growth may be better than the whole life, similar to the potential of an indexed annuity possesses over a traditional fixed rate. Because of indexing, you might get a higher return than the fixed whole life rate. Of course, past history does not guarantee future performance, as we all know. But with indexing UL, what happens is a client shares in the gain in the market, but none of the losses. So there's an upside potential, but no downside risk. And this is what people are looking for these days. A quick look at the specs for this product, the Wealth Max Bonus, shows just like the whole life plan, it offers a guaranteed death benefit greater than the premiums paid. It offers guaranteed values and non-guaranteed values, and we'll cover the specs and the current caps on this product in just a few moments. But what really makes this particular product so popular is the 4th and 5th bullet there. A 12% instant premium bonus and a full return of premium option for the client. Now those are some great selling features. Who wouldn't want a 12% bonus, and who wouldn't want the option of getting all their money back at any time should they find something better in the market? Again, the Wealth Max Bonus also offers living benefits for home health care, nursing home care, and terminal illness, and the 5% free withdrawal privilege is available, just like it is on the whole life, starting on year 2. Using the same example as we did on the whole life plan, a female 62 putting in $50,000 would have a guaranteed ultimate death benefit of $98,000. and a non-guaranteed death benefit $132,153. All of the death benefit, with the exception of the $250, can be used for home health care or nursing home care. Now, if we look at the tabular detail in this plan, you can see the guaranteed and the non-guaranteed values. On the guaranteed column, which is the middle of the page, again, that represents on this product a 2% interest rate and the highest cost of insurance which the carrier is allowed to charge. You can see in the early years the death benefit's a little higher, and then as just 2% is being credited and the highest cost of insurance is being withdrawn, it does slowly drop down until the ultimate death benefit of $98,000. You can see the cash surrender value. The $50,000 that the client put in is always available, and eventually it starts to grow. If you go to the far right-hand columns on the non-guaranteed, you can see the initial death benefit is $132,153, and then it continues to grow based on the S&P 500 performance. What we illustrate here, these numbers assume the current cost of insurance on the mortality and a 25-year history of the return of the S&P 500. So you can see the death benefit slowly starts to rise, and again, as this death benefit goes up, the living benefits go up. And once again, just to reiterate, the policy does offer for free withdrawals after the first year of 5% of the accumulation value. So that non-guaranteed accumulation value column, if the client had an emergency, let's say the car breaks down, the roof blows off, anything like that, they can request that the company give them a withdrawal for their policy equal to 5% of the accumulation value. Okay, so with all this being said, hopefully you will have a feel for how the product can work for your clients efficiently and to the best of the benefits. Now I'd like to turn the phone over to my associate, Maria Adams, and Maria will give you a quick overview of the specs of the policy and how easy it is to apply for and to get underwritten. And then I'll be back to take just a few more minutes to discuss who the prospects are for this type of plan. And I think you'll be surprised. There's probably a few on that list that you haven't thought of. But right now I'm going to turn it over to Maria Adams.
Thank you, Joe. Hello, everyone. I just wanted to go over these product specs that on the two plans that Joe had just discussed with you. As you can see here, the issue ages for the Wealth Max bonus is age 50 to 85, and for the Wealth Shore, it's 55 to 85. The minimum issue premium for both is $10,000. The maximum issue is $750,000 for the face amount. The interest rates and caps, as you can see for the Wealth Shore, the current interest rate right now is 4.90%, which is great, and the minimum being 3%. And for the Wealth Max bonus, you can see those current interest rates, which are high, and also their minimum guaranteed rates. The reason why the caps are higher than annuities right now is because there are mortality charges in the policy. So the company doesn't have to rely on making a profit on the spread like the annuities do. So it is a good product for those clients that are looking for some investment, but also great for wealth transfer for them. Along with that, you know, the commissions on most of these products are double-digit, but again, that depends on the age of the client and which product they choose. Along with this, I just want to mention too that we do have other products that have, you know, lower issue ages that will start at 35. So if you do have a client at 35, 40, you know, under 50 and is looking for something similar to this, we can also assist you with that. The next slide here, it's letting you know the statistics on these two products. Who's purchasing what? As you can see here, the Wealth Max bonus, the sales are higher, 77% compared to the Wealth Shore. Again, the Wealth Max having that 12% premium bonus, the full return of premium. They both, again, do have a 5% free withdrawal after the first year, but Wealth Max bonus is the popular one out of the two. The average size premium, you can see, is $81,500, higher than some of these annuity sales sometimes. The gender, women, females, they just love this product. Again, it's just something that they don't have to burden their children or spouse with. They're comfortable having the long-term care rider there for them if they need somebody to take care of them. The source of funds, where these are this money's coming from for these policies, the majority of it is cash with application, savings account, or CDs. And then you can see the numbers there for the annuity business and the life business. The average age is around 72, and then you can see the breakdown there on the other ages for clients. Okay, how do we get started writing the single premium life? Actually, it's very easy. One of the easiest policies or applications to complete and do. Once you're appointed with the company, of course, you complete an application and the disclosure. While you're with your client, you do the phone interview while you're with them. The phone interview, of course, will take about 15 to 20 minutes, and the questions that are on that application are the exact same questions that they will ask on the interview also. And again, it's always nice just to have their their prescriptions, medications and everything, they're handy, and their doctor information, so you can go through that interview quickly. But once you've done that and completed the phone interview, you take the application, you can either mail it, but we actually ask that you fax the application directly to the company, and within 48 hours you will have a decision if your client is going to be approved or not. So that's basically it on the underwriting or completing the application. Underwriting, you know, again, these underwriters know these clients in their 60s, 70s, and 80s, they'll have some sort of health issues, you know, cholesterol, blood pressure, even some clients being diabetic, as long as they're not on insulin. But if you have a client that you're working with and there might be a health issue or a heart issue, again, we just ask that you email myself or Joe Corio, let us know the circumstances, we'll get it to the underwriter, and they'll let us know if it's a case that, you know, they would even consider. So, and the nice thing, too, with this product, and with most of all the other companies, too, there are no parameds. There's no blood, there's no urine. They'll just go off of the phone interview, and if they need to go for an APS, then they would go ahead and do that. So that is it for the underwriting. I will now hand it over to Joe so he can talk to you about who the prospects are for these plans.
Thank you, Maria. Okay, prospecting for single premium life. Well, we've already mentioned in the beginning of the presentation that there's somewhere between $5 to $10 trillion in banks, depending on what report you read, but they're in bank CDs, money markets, passbook savings. Most of these are earning less than 1%, and they're waiting to be transferred to beneficiaries upon the bank holder's death. Of course, these are great prospects for single premium life because you can immediately increase the size of the wealth that's being transferred to beneficiaries. When your clients want to immediately increase their beneficiaries' inheritance by 30, 40, 50% or more into a tax-free death benefit and still have full use of the money for themselves if the need arises. So the return of premium offers that, and these products are pretty hard to beat, actually. We also mentioned the high cost of long-term care. Many folks only don't like the high cost of long-term care They don't like the use it or lose it benefit. So this comes without saying, these are perfect prospects for single premium life. If they move their funds to single premium, they can use the funds for care or they can go to the beneficiary. Either way, they're never lost. But the other thing about folks in long-term care, maybe you have some people that you've tried to write for long-term care and they were declined. Well, we're finding that a lot of declined LTC coverages become approved single premium life cases. And the reason is most of these cases of policies are life policies. And life policies are underwritten much differently than long-term care. Life policy is underwritten for mortality. So a lot of times when you're declined for long-term care, we can still find an outlet for you for single premium life. Now, how about existing clients that have old UL plans or that are ready or have plans that are ready to implode, or ones that people never add premium to anymore? If you're in the life business and you get annual statements for your clients, and maybe they had an old UL, and maybe you're noticing that they're not putting any more premium in. That means the client's done with that policy. They don't want to fund it anymore. They're just going to let it run out. Well, don't let that happen. Go to them and show them that, you know, if they keep their old policy with no premiums going in, it's not going to stay in force very long. But if you take the current cash values and do a 1035 exchange to the single premium life, you can still have some kind of death benefit. You don't have any more premium payments, and you have the living benefits for long-term care and home health care. So these clients make a wonderful prospect for single premium life. Finally, there are annuity clients that may be good prospects for single premium life. That's right. Many clients have no plan to use their annuity funds. They're earmarked for beneficiaries. It could be non-qualified money, and even in some cases, qualified money. We've done a lot with even moving qualified money to single premium life plans. Now, you can't do a transfer from an annuity to a life plan. But let's just take a look how things would work if you had an annuity that you wrote years ago and the client didn't really have a need for some of these funds. If you see here, you got a female 65, maybe she put $100,000 into an annuity. That's the cost basis. Over the years, it's done a good job and it's grown to $130,000. So she's got a $30,000 gain. This was a non-qualified annuity, and she's in the 30% tax bracket. The taxable event on this would be about $9,000. So if you took the $9,000 off her $130,000, she's still left with $121,000 after tax. If she were to transfer that to the Wealth Shore, it would provide an income tax-free guaranteed death benefit of $220,000 and change. So you just took her $130,000 of taxable. You converted, you paid the tax on it now, so you didn't avoid taxes, you're just minimizing taxes, and you're taking the balance and putting it into something that's going to start to grow tax-free to beneficiaries down the road. And in addition, this client has roughly $220,000 of living benefits for home health care or nursing home care. So you can see how this is an example of a non-qualified annuity. It's a little different with qualified, but believe me, it can still work because of the benefits of this policy. The 12% bonus helps ease a lot of tax pain, and I can show you other ways what we use it for qualified money as well. Not all instances, but in some cases, if the situations are right, it could work very well. So, all that being said, there is a place on your screen where you can put in questions, and you can text them to them. I think we have one for sure. Can a 1035 exchange be made from an annuity to the single premium life? And we just went through that. No, it really cannot. You would have to cash it out, pay the tax consequence, and then go from there. But again, that's not necessarily a bad thing. And once it's presented properly, which we can help you with, we can really help show the client where not only themselves, but their beneficiaries would be much further ahead. And the more I work with this product, ladies and gentlemen, the more I realize that one of the things that people don't want these days is to leave their beneficiaries with a tax burden. So hopefully we can help you in this situation. Now, if there is a poll, give an example of qualified funds. Qualified funds would be anything that the IRS has already put their stamp of approval on. An IRA is a qualified fund. A 401k is a qualified fund. A pension plan is qualified. Now, if you're just pulling money out of your checking account or savings account, something that's already been taxed, that is non-qualified. So that's the difference there. Okay, if there's I'm not sure if we're having a poll question there, but if there is a poll question, we were just wondering if you wanted to be contacted in regards to single premium life. We don't want to waste your time if you don't want to be contacted, but if you do want more information, either contact us, or if there's a poll question there, you can answer that, and we'll be glad to, take a little more time with you one-on-one and go through the plans, go through ways that you can use it, and how you can benefit and your clients can benefit from single premium life. Let me just see if there's any more questions here. Hold on a second. Give an example of qualified funds. I think we answered all that. I think we're good with the questions. That's all I see here today. So hopefully we've found a couple minutes of your time. We gave you an insight of how single premium life works. We appreciate you taking some time to join us today. I know your time is valuable, and we look forward to working with you in the future. Thank you, and have a great day, everyone.